Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q1 FY26 post-earnings conference call of Jyoti Resins Adhesives Ltd. Today on the call from the management team we have with us Mr. Utkarsh Patel, Promoter and Managing Director, and Mr. Samit Shah, Chief Marketing Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to give us their opening remarks, detailing us about the business and performance highlights for the quarter ended June 2025 and their plans for the coming year, post which we will open the floor for Q&A. Over to you, Utkarshji.
Good morning to all investors and analysts. I welcome you all to the Q1 FY26 post-earning call of Jyoti Resins Adhesives Ltd. Q1 has been an eventful quarter for us, signified by kickstarting of our advertising, marketing, and branding campaign with noted actor and celebrity and our brand ambassador, Mr. Pankaj Tripathi. We have released multiple advertisements across several TV channels like Aaj Tak, India TV, CNBC, Zee Business, etc. Also on Instagram, Facebook, and other digital mediums to provide the necessary push to our pan-India growth plans. We have established our presence in 14 states, with Delhi and UP being our newest states. Our aim is to widen our offerings in existing and new states and increase our penetration in existing states. Our top 5 states contribute to 75 to 80% of our overall sales volumes. However, other states have witnessed good initial traction to our ground level efforts. Q1 witnessed early monsoons, which lead to softness in the demand for wood adhesives, and I'm sure has also impacted several other related industries. However, while other competitors witnessed sharp drop in sales, we were able to keep our volume drop within a 3% lower threshold of what we achieved last year. This was further supported by our continued efforts in the trade with more than 30 dealer meets and mega meets of our end users carpenters conducted in April and May month across territories. Our latest investor presentation uploaded to exchanges has highlighted our latest ad campaigns with links to the ads as well as pictures of some of the dealer meets conducted. We continue to operate at 60-70% capacity utilization rates. We are looking to increase our brownfield capacity by 1500 tons per month over a period of next 6 to 12 months, which will take our total capacity to 3500 tons per month, thereby enhancing our ability to produce and sell more, get operating leverage on higher volumes, as well as be competitive in the market. The total capex expected in this brownfield expansion will totally not be more than 10 crore rupees. Further to this, we are trying to scout the land of our next greenfield expansion on the outskirts of the city. As and when we move forward on this, we will keep you updated. Overall, we continue to be focused on reaching 500 crore turnover mark over the next 3 years, led by volume growth. We also continue to guide for a long-term 22 to 25% EBITDA margin range, as we have always done in the past. We are working hard on the ground level as well, using all available opportunities for branding, marketing, advertising, and trade marketing to scale up and maintain our number two positions in the synthetic wood adhesive space. Now I'm opening the floor for questions.
Thank you, sir. We'll take the first question on the line from Mr. Smith Gala. Smith, you can go ahead, please.
Yeah, sir. I have 2 or 3 questions. The EBITDA margins as guided have come down because the increase in marketing spends. But at the same time, the revenues have not catched up to that. That was question one. And with the guided revenue catching up in the year to follow, there was a guidance that the operating leverage will help the EBITDA margins to not go down. So what's your take on that?
As I mentioned, that quarter one was soft due to the demand and because of the early monsoon was there, and that affect the business, all the building construction material. And we have done the trade marketing in April and May month. So that leverage will be give us the for the long year. So it is not the immediate jump we can get increase into the revenue, and but we are trying our best, and we are on to the ground level efforts with our trades and with our end users also. So we are very confident about the next 2 3 years of journey what we are taking and lifting this organization from that level.
Okay, so your full year guidance for revenue growth is now, is it adjusted?
That is not the it's a YOY 3% of drop in the volume as a quarter one. But we have 3 more quarters to cover that, and we are optimistic for the after Diwali the market will be open at that level that we can cover our volume growth.
Okay, and EBITDA margins will stay for 22-25. There will be no operating leverage with the volume growth guidance.
See, we have always guided that 20 to 25% EBITDA for the longer term. But right now, as you can see, that is 27.5% we land. And because of the trade marketing aggressively we done into the April and May month, we done the more than 30 dealer meets and several mega meets for our end users also. So that expenses come into this quarter. But I think 70 80% territories is already covered with this trade marketing. So within this next 9 months, trade marketing will be less as compared to the quarter one. But we will continue about the brand communications what we have guided for that. So I think we are optimistic for the 27 to 28% EBITDA for this year throughout the 4 quarters.
Okay, so for this year it will be 27 to 28, and going forward it will shrink with volumes.
Right.
So, but going forward after this year, the volumes increasing will not help the operating leverage to keep the margin at 27 or 28%.
That can help, of course, if we can grow by the good volume, then that will get that, of course. But we want to be give the conservative guidance to the investor. So that's why I'm keeping the 27 28 figure.
Okay, thank you. That was helpful.
Thank you.
Thank you. We'll take the next question from Aditi. Aditi, you can unmute and ask. Aditi,
Hello,
we
am I audible?
yeah.
Okay. So are you stepping up sales promotion expenses in your top 5 matured markets?
See, it's about the customizations right now. We monitor the territories and where we found the more competitive market and we don't want to lose the customer. So we modified our sales promotions offers within the territory. So that the customizations programs and that CRM we are into that, and to build the more deep do the deep penetration within this end users criteria and everything. So yeah, so we do the customizations in a way that we can not lose the market shares.
Okay, customization in the sense that different for matured markets and newer markets.
Yes.
Okay,
Yes.
so what can you just list down few of the methods which differentiates both of them, like in the ways you do the sales promotion expenses there?
See, basically, in a newer markets, it is initial stage. We want to push our product. We want to do placements of our products into the shops, into the retail counters. So that is the program that how can we give them that comfort to associate with us with a new brand. Example in UP and Delhi. So right now we have do the placement of 550 counters in UP. So it is a different strategy as compared to the Gujarat, because Gujarat is already a accepted market for our brand, and UP is a newer market. So we do small programs, small placements like 50 kg, 100 kgs placements into that sales promotion offers. So and in Gujarat it is volume based, loyalty based offers. So like this.
So, since you mentioned that Gujarat is already a well-established market, so why do you think there lies a need of doing promotion expenses there?
Sorry, why?
Why do you think the need lies to do the sales promotion in the markets of Gujarat?
So it is the customer satisfactions and the loyalty about that. So we don't want to lose the market share. We are keeping our margin at that level into the Gujarat, but few things is requires. So we believe that we should focus about the long term association with the carpenters or the dealers. So it is not like that we keep our margin and we just shut down all the promotions and discounts and not pass to them. I don't think so. That is the right strategy for that.
Okay, and so how much do you expect to spend on TV ads on a quarterly basis?
So we are targeting for 7 to 8% of total revenue for the entire year. So half will be into the trade marketing and half will be into the brand communication. So you can consider 4% around of the revenue.
4% of brand communication comprises of TV ads and the one which we spend on brand ambassador, right?
No, it is about the brand communication. So it is about the TVC. If we go about the prints or media or any kind of outdoor hoardings or etc. So that considers the brand communications.
Okay, sir. Thank you.
Thank you.
Thank you. We'll take the next question from Max Singh.
My question is why the other expenses have shot up this quarter in comparison to the last quarter or even the last year's quarter.
So mostly the expenses is into the sales promotion offers this time, and other expenses you are considering it is about the transportation cost and other branding and advertising. So can you elaborate how you compare with the quarter 3 of last year or what?
Yeah, quarter four also and even quarter one of last year.
Yeah, because we do the more expenses into the April and May month. So that is the reason. And March and February month was the revenue month. So we cut down that expense.
Okay.
So
And I
Mehak, this
wanted
will
to,
also include expenses towards brand ambassador and the events and all that we've conducted.
okay. Okay, thank you. And another question I wanted to ask is the raw material cost is very less compared to other competitors like Pidilite or HP adhesives. So do we have any cost optimization in place here?
So the difference is the product portfolio. They have so many products within the basket. So we cannot consider the same raw material as that. So there is a different paints, epoxy, adhesives, constructed chemicals are there into their portfolio, and we are into the white glue. So that's why there is a no comparison for that.
Okay. And what is the capacity utilization in this quarter?
For this quarter 1, you are saying?
Yeah, for quarter one.
So it was around 65 to 70% of
Okay.
capacity.
Okay. Okay. Thank you.
Thank you. We'll take the next question from Shanti Saravi.
Hello.
Yes, sir, you're audible. Go ahead.
I definitely regard to this so seriously. So, like, last year it's almost 4 crore higher for 2.25 crore. So, like, this is
Sorry,
the
sorry, you are
expenses.
not audible. Can you please repeat this?
So, my question was in regard to the sales promotion expenses. It's like from last year it's almost up by 50% close to. So, this includes only this the new and they have been coverage part or the other expenses also include cost?
Shanti, your voice is very muffled.
Cannot hear you properly.
Yeah.
Shanti, your voice is breaking. You can send us the question on the chat. Yeah.
Maybe I'll join. I'll just have check my line and then ask for
Yeah,
the
yeah.
question.
You're clear now. You can continue.
Okay. Actually, my question was in regards with the sales promotion expenses. So last year, from last year, the current quarter last year, the expenses are almost increased by 50%, close to 50%. So like this year, we have hired like Pankaj Tripathi. So the increase is mainly because of that or any other reason also?
No, so because the productions and the cost of the celebrities comes into this quarter, so because of that, but that is going to divide into the entire 3 years of reign. So it will not be higher for that level for all the quarters. And also we have started to spend into the brand communication. So this is first time what we came into the media. So that's why this is the first time expense into our balance sheet.
Like the cost we have paid to suppose the brand ambassador. So it has been accounted for in this quarter for the entire 3 years per period, or it's like we'll divide it into every quarter every year.
No, it is about the all expenses not come into that. That is a partly payments, and that about the divide into the all the quarters. But depends upon that how we pay, and that is the methodology guided by our auditor. So it is not the full payment done yet, and it is partly divided into the quarters.
So like so you said that from current year we'll be spending close to 8% on this promotion and everything. Total last year, what was the percentage we're spending on this same kind of things?
No, that was a zero because we have started the brand communications from this quarter only. So before years we were into the 2% of trade marketing of the revenue, 2% for the trade marketing, the dealer meets, carpenter meets, gathering, etc. And now we are moving to the this TVC digital campaigns, etc. So this is the first time these expenses there.
Current year we'll be adding up almost 8% cost to our expenses side from current year only for this particular head.
Yeah, we can consider 7 to 8%, yeah, of the revenue.
Oh, just a request, if possible, if we can make a special heading, like differentiated heading for this particular expenses that we're having from current year. So for investors, we could have better idea like what is the exact cost that we have incurred extra
That
from
is
this year.
that is the auditor guidance. Actually, we cannot change anything, and we'll try our best to if we can go with more transparency. We'll try for that.
At
Sure,
least in the presentation, if you can give the details of the amount, that will be helpful.
sure. We'll take these suggestions of yours, and we'll definitely look about this if we can do for that.
Thank you.
Thank you. We'll take the next question from Yash. Yash, you can unmute and ask.
Hi, am I audible?
Yes.
Yeah, sir, actually, my question is regarding your cash flow statement. I think there's actually a mistake by your auditor. What is happening is on screener and wherever you look, your cash flows are actually looking negative because the FD amount, the money that is going into FDs, is getting characterized under the wrong classification. Can you please get that fixed and checked?
No, Yash, that is not incorrect. Basically, we give it in our whenever there is a quarter where the balance sheet is disclosed, right?
Right.
We always give a clarification in the presentation that as per the Ind AS accounting standard, right? What is it? That is the adjustment in the cash flow because of the changes in the nature of the fixed deposit, right? And that
Right.
adjustment, we provide that if we adjust that back, then what would be the correct operating cash flow, right? So, for example, if you see Q4 FY25,
Mm-hmm.
as per the cash flow statement, it is 14.7 crores. But then
Okay.
there is adjustment in the non-current financial assets to the tune of 2.8 crores. And then there is adjustment in the other bank balance to the tune of 30.8 crores. So when you re-add that back, the correct or the reconciled cash flow from operation is 48 crores. And these
Exactly. But
changes that happen is
mm,
primarily on account of fixed deposits, nature changing with moving to maturity beyond 12 months and to maturity between 3 to 12 months. And this is
so
again as per accounting standards.
Right. No, because when I saw your when I was looking at your balance sheet and cash flow statements
Yeah,
initially,
yeah.
it kind of looked like your cash flows are negative, which was very very surprising for a business like yours. So that is why I maybe you're right, but honestly,
No,
this is
which
the
is why
first
we
time
give
I'm
this
seeing it.
clarification in the presentation also.
Right.
And the fact that our cash flows are not negative is clear that we have almost 140 crores of
Exactly.
fixed deposits
Exactly.
sitting with us,
100%. Yeah.
Yeah, but we
My
give
next
this clarification in the presentation with every half year because it's an accounting treatment which we cannot handle, right?
Understood. No, makes sense.
Yeah.
Your capacity utilization, like Sir said, I think is 65%. This could you just throw some light on the brownfield and the greenfield expansion? Because if your capacity utilization is 65%, uh, uh, basically even if you, I'm assuming you can push it to 110, 115, right? Could you, what capacity utilization can you go to? And the capex that you're doing, the brownfield and the greenfield, is it for the same products or different products, or are we looking to get into different product categories?
No, for the brownfield and greenfield, for both for the this product only. And right now the utilizations is the almost 85-90%.
Okay, I thought you said 65%. Hence, I asked.
No, no. So right now it is utilizations is there, but the maximum capacity is the 85% we can consider for the total capacity.
Okay, okay. So basically, at 85%, you max out, is what you're saying, sir.
85 to 90% max out we can say, because sometimes the plant break down, and there are so many factors that we consider into that. So that is 90% we can say of the total
So,
capacity.
right, and the brownfield expansion also is for the same product, same thing, right? No
For
difference
the
there. Hello.
same products.
Yeah, and is this brownfield expansion close to your greenfield expansion?
Not exactly close to, but we have not started for that. But we'll keep continue to guide our investors, and I think we will move for that for the next year's planning. We can consider into 27. We'll start planning for that.
But are you planning to do it in the same state? That was my main
Same
the
state,
thing that.
same state nearby in Ahmedabad, same state.
Okay, and you said you want to enter new states, right? Could you just kind of guide us on which state you're planning to be more aggressive to grab market share? Which state do you see the most amount of sort of potential in? And which state you want to be very aggressive with in terms of sales growth and sales promotions?
See, all the tier one cities are always where the real estate and infrastructure are more developing, and the more population is there. So we consider UP is a very good state that the new developments are next coming years. We are optimistic for the West Bengal also. We are planning for the Bihar, Jharkhand, Odisha states also.
Right.
Telangana is doing well also. So we want to do more penetration into the Telangana also.
Right. So, when you enter a new state, sir, do you basically just hire a particular distributor for that area or for that particular state, or how do you exactly enter a new state? What do you do when you're entering a new state?
So it's about the same network establishment. So obviously we find out the more experienced people into this network who has the good network with the dealers, these hardware plywood laminate shops. So of course we find out that type of channel partners, and we also hire the well experienced team in our fields for that.
Is it
So
safe to assume you kind of target like Pidilite distributors or Pidilite sort of people who are already
I'm
working with
starting a
these
dance
kind of
class today.
brands?
So it's not about that particular product, particular brand distributor. We see about the network, what he has, how he's motivated, and how he can help us to grow our business. So it is not kind fixed formula we can say, but yes, of course, very well experienced and well network people who can push our product from the first day. So we always find out about that. Channel partners.
Yeah, I'll come back in queue. I have a couple more questions. I'll come back in queue in case somebody else wants to
Sure.
kind of ask.
Thank you.
Yeah.
Yeah.
Thank you, Yash. We take the next question from Vijay Shah. Vijay. Vijay.
Yeah, hi. This is Bijal. Yeah, thanks for the opportunity.
Bijal, your voice is echoing. You'll have to come closer to the phone.
I am closer to the phone only.
Yeah. Go ahead.
So, my question is, see, you have seen a 3% decline in volume and there is a 9% growth in revenue. So that would imply around 12% kind of growth in your realization. So what does explain the 12% growth in realization? Is it the price hikes the industry has taken, you have reduced discount, or there is some change in product mix?
So can you repeat this 12% of?
Sir,
See,
I'll answer that question.
Sure.
So the revenue that you see is on account of the adjustment for redemptions and new provisions, right? If you were to reverse that back, then the revenue will be around 5% negative, in which 3% negative is because of 3.5% negative is because of volume drop.
So, no, sorry, I did not understand this because
Every quarter we have new points created and points redeemed, right? Which get adjusted in the revenue. If you adjust that back, then the revenue comes to minus 5%, in which what we have said is minus 3% is because of volume drop.
just just want to understand. So, more redemption took place during the quarter. That's what you mean?
Yes.
Okay, so more redemption took place, and when you are talking about 3% volume growth, you are not talking about the growth or volume which you have given to carpenters on redemption of the points. You are talking about the volume which you sold along with the point, right?
No, we are just talking about net sales. We don't talk about any free goods, nothing. We're just talking about net sales. Our net sales is down 3% in terms of volume.
Yeah, but on the revenue it is gross, and in the volume what you are talking is net. That is the difference.
The revenue is also net only adjusted. When you have redemptions, you don't give any free goods to carpenters. There are different schemes in which they take different products, right? So you don't give free goods to them.
Okay.
So when that redemption happens, it gets added back to the revenue. And when they create new point, it gets deducted from the revenue. So if you adjust the net effect of that, the revenue is minus 5%, of which minus 3% is because of volume drop.
Got it. So let's say minus 5% is your revenue, and what is reported is plus 9%.
Correct.
So are you saying that you gave out a kind of 13% kind of different goods to them, and that is coming in your revenue? Actually, this is
No,
very confusing.
the right way to word it would be that there was incremental redemption versus provision creation of almost 5 crores.
Okay, but when you in provision incremental redemption,
So the difference between redemption and provision creation is approximately 5 crores.
5 crores. So you actually there is more redemption than the provision creation, right?
Correct,
And
correct.
that redemption is happening. So incremental 5 crore of
Yeah.
whatever redemption happened, you have not sold that much of uh, that much of adhesive. You've given them other things, whatever it could be a bike or it could be a
No, no. So when the points get created is what defines that whether we have sold more or not. When the points get redeemed does not define whether we have sold more or not. It is a redemption process which a carpenter can exercise at any given point of time, right? Because of the points that are accumulated with him. Or we sometimes also have our team pushing them to redeem the points. But that does not define whether we have sold more or not. So when I tell you that our volume growth was down 3%, that will define how much have we created this time or how much carpenters have bought and therefore created their points.
honestly, I don't think that I really understand this part. And I
See,
mean,
okay, I'll explain it to you. When we
no,
sell
if you can
goods,
explain with like what was the volume number, then it will be helpful. And I think this is a very central question with respect to the liabilities which is sitting in there, cash which is sitting in there, and this reconciliation. So if you can patiently explain, I think it will be for the benefit of entire shareholder community.
So we have done
And
this
with
before.
with
We'll
the
do it again.
numbers, I mean, with 1Q number of this year, I mean, if you can just reconcile this number, actual numbers, rather than talking in percentage that what happened. So whatever number you reported of around 70 crore odd, 75 crore, how that number has come. If you can reconcile that number, it is helpful. If you are
Yeah.
telling me that it is 8%, 3%, and all these numbers, I really don't understand.
No, so I already gave you that. Only thing is we cannot give you some very specifics due to competitive reasons. So the 75 crore that you see, which is the reported revenue, in that if you reduce the net of provision versus redemption, the effect is approximately 5 crores. So your effective sales, which we capture on account of actual sales without any adjustment of redemption, is approximately 70 crores, right? Which
Okay.
is 5% lower versus last year Q1.
So last
Okay.
year Q1, by that,
Last year Q1, the adjusted revenue was 74 crores. Last year it was the reverse. There was more creation versus redemption. So last year there was a reduction of 4.5 crores in the revenue, which we add back was 74 crores. This time, if there is incremental redemption of approximately 5 crores, which if we reduce, it comes to 70 crores. So there is a drop of approximately 4 crores, which is approximately 5%. Yeah.
okay, I'll take it offline. And so we are talking about around 20% kind of volume growth for the full year. Uh, can you give us, this will actually through the year translate into 20% kind of revenue growth, the one which you, I mean, reported revenue growth, or it could be any number after that? Because
Utkarji, you want to answer that?
Yeah. See, we are trying our best, and we are working on the ground level. As every year we are putting more efforts and putting more creativity into our current management. So as I mentioned, that first time celebrity is onboarded, and we have started brand communications. And in a quarter one, we do the trade marketing, more than 30 dealer meet. So this is the first time that because it is in the 45 days we have done the 30 meet. So if we consider into the 1st April to 15th May, so every day or every alternate there is a meet into some territory. So an example, we done in Jaipur, in Mumbai, in Bangalore, in Ajmer or Kota or Indore. So every territory, most of the territories we covered. So these are the efforts we have done, the aggressions, but that effects cannot generate the immediate revenue into within this quarter one. So this investment will lead us to the more revenue growth into the coming quarters. So we are optimistic for that. And as the quarter one was the all over soft, the demand was all over soft. We can see all over the building construction material industries are not into that growth. So we are optimistic for the next 3 quarters. And after Diwali, I think the market will be with more demand, and we can cover that this gap from that.
but after Diwali means, I mean, 2Q also will be on the similar line. I mean, it is more about second half when you would look to recoup entire volume guidance.
Actually, what happens to us is if as I mentioned that 75 to 80% revenue is generated from the 5 states, so remaining states are into the development. So in a UP, we have started the 550 counters. So new 550 people of retailers now know our product, and they are keeping our product. So I think that is a good start, and that is the initial stage, initial placement stage. So that is not a big volume generated from UP. So the registration program also into the pipeline. So we are onboarding the so many carpenters into this newer states. We are hiring the people. So it is on the development stage. We are improving our CRMs. We are improving our customized programs. So we are on that stage to lead this journey. And this is a B2C. This is a network business. So it is not immediate effect we can get about. But if we go about the longer term, then if we have achieved this 300 crore of top line, So we are very confident about that. From that this level, we can take our organizations to the 500 crore of top line.
Sir, only one comment. I mean, if 1.5 years back also it was the same thing that we are getting into new state, and that time also the story was about UP and Delhi. Now 1.5 years later also the story is about UP and Delhi, and the growth. I mean, in F24 it was a negative, slight negative revenue growth, and F25 it is 10% growth. So, sir, I mean, we have spent enough and more time in UP and Delhi. So, if there is any milestone where we can be much more certain that okay, those markets are like now turning around for us. Otherwise, I mean, it will be always that okay, we are investing. Of course, uh, you would be investing in new states, but finally, the revenue growth has to be. I mean, if I look at your revenue versus your top competitor, it's a very small proportion, small fraction of them. So, taking away market share, should it be that difficult? And what kind of revenue growth uh, we should be looking at? I mean, I guess probably much faster revenue growth, especially F24 and F25, the growth was subdued. So probably we should be looking at much faster revenue growth in 26, 27. That is how probably investor would look at the company. So thought I'll just share with you.
See, you are very right on your view. You are as an investor, you are what seeing and what you are explaining. It is very right. But see, we need to see about the strong and steady growth also. As a Jyoti Resins, as a Euro Adhesives, we have always look about the concrete and the strong steady growth. So you are seeing our balance sheets that we are delivering the 30% of EBITDA. So no other any other industry in a wide blue has delivered that. So that is the first thing what I want to mention. So that is always it's a parallel things. If I just go away for the just burning the money, this hardcore earn money and just go for that. So it is not like that. What strategies we want to believe about that? We always want to focus into the core of the actual customers and what is the problem with that and how can that retain us and how can be they loyal to us as a brand level. And I believe when you go in a some level faster and you just spread a network like anything and you appoint so many channel partners, you appoint so many people, then the quality will be compromised. So we don't want to go about that. As a Jyoti Resin, we have always believes about the profitability should be there, and we have maintained that from so many years. We are debt free. We are not hiring we are not taking the debts or any like startup business what they are burning like money like anything. So we are not into that path. So maybe you are right in that level, but we are trying our best that how can we leverage this network and how can we go more faster about that. But I'm very confident about the if the market will support, we will definitely reach our destinations for that.
Okay,
Thank you,
so
thank you very much for your
thank you
suggestion.
very much.
Thank you. We'll take the next question from Amit Agicha. Amit.
Sir, am I audible?
Yeah.
Hello, good morning, sir. Am I audible?
Yes, you're audible.
Yeah. Thank you for the opportunity, sir. So, how much is the current confirmed orders and dealer stocking levels post Q1 marketing push?
Sorry, can you repeat the questions?
So, the confirmed orders or dealer stocking levels post the Q1 marketing spends.
Confirmed orders.
Yes, or the dealer stockings, like the inventory level with the dealers.
See, we are working with the 13,000 dealers, so it is not possible to. It's not like a B2B kind of business. So it is a current situation that we are getting the orders daily basis into this model, and we have kept our inventory into 52 depots of our pan 14 states, so that dispatch goes from that depot. So it is a daily base, daily at least twice the delivery is there for that. So it's a different stock maintained by the different stockist for that.
Okay, sir. And sir, one more thing, like about the market leader, can you just throw some light on like what is the difference in like ours and them? Like they are a big company, but like what is their size and what is our size as far as the adhesive is concerned?
So it's a I cannot guide you about the particular company or brand in this call, but I can give you the all over market.
Yeah, the TAM, no?
Yeah, so see, it's a 7,500 crore of market per annum, and we are into 300 crore of top line. So we are planning to grab at least 500 crore is the first benchmark we want to achieve, and then after that 1,000 crore we want to reach about that. So it is a thought process that we, as a brand, as a Euro adhesives, we want to be present ourselves at least 25% of market share in each state. So this is the journey what we want to go for next years.
And sir, this 7,500 TAM is for India or for the global level?
7,500 crores
Yeah, this is for India or for the global?
for the India.
Okay, sir. Thank you, sir, and all the best. Thank you.
Thank you.
Thank you. We'll take the next request from the chat box. I request Yash to unmute and ask the question.
Yeah. Hi, am I audible?
Yeah.
Yeah. So, have you ever explored the export markets? Why don't we look at exporting our products?
So the reason is always it is about the vision, and the our vision is to make our Euro adhesives at a retail segment brand. So it is already a huge market share lying into India in our current states. So we don't want to lose our focus, even 1% focus into that. So we are more focusing into the develop these remaining 9 states that we can penetrate more, and we can go for the at least 25% of market share. So
But
if
hmm, no, sorry, continue. Sorry, sir, continue.
if once Euro Adhesives is a brand, and now people, the carpenters are accepting us as a wide group brand, then that is a continuous sales what we are getting for that, and that is a B2C network's beauty about that, and we want to continue our journey into that only.
Yeah, but sir, I've also noticed that brands like yours, in general, in categories like yours, which are highly competitive, have done very well in markets like, for example, Bangladesh, Sri Lanka, Nepal, because there your competition is very low, and the markets are also kind of developing as we go forward. I just wanted to know if you've explored these markets. Have you explored these opportunities yet, or you still haven't got there? You're still just focusing on local.
No, we have thought about that obviously, and we have discussed internally also. But all the vision is about this domestic market, and there is a market share. That what you are thinking about, that should be into the thought process. When the market share is limited and you have covered entire the market, then definitely we should go about that growth also. But right now, if the nearest market shares are pending at doing the so much, and we can grab this opportunity in this way, so we don't want to lose our focus into that. And right now euro is at that level because of the first strength is the focus. We have remained into the white glue, and we have direct connection with our users, our retailers, and that's why we are getting this type of EBITDA. So we don't want to do for the going for the overheads, and after 1 or 2 or 3 years of continuous journey, and then we came to that positions can no we now we want to focus into the more domestic. So we have that vision that we want to go for the domestic only.
Right. And sir, as a percentage of cost, what is our logistics cost? Let's say from to move material from our factory to our distributors in other states.
It is very state wise, but it is generally 2% to 2.5% of the revenue.
Yeah. So one of the reason I asked you this particular question is, why are we expanding the brownfield in the same state? Why are we not doing that in a different state
So
to
we
get
are
some
we are
sort of cost
we are getting
optimization?
more into the central and western part. So that is the first reason. Gujarat,
Okay.
Rajasthan, MP, Maharashtra, Karnataka is the western and central part.
Right.
If we grow in the east part after coming years, maybe more generate the volume, then we will require to set up the plant into the nearest area. Right now, it is not the requirement for that because it is a generally 2 to 3% of the transportation cost for that.
Right. And do you give state-wise breakup sales?
Not no, cannot give you into this call because it's a competitive information, so it's not possible for me to give the breakups.
At least if you can tell me your top three states make up for what percentage of your sales,
It's a
whatever those states may be.
it's five states what I already mentioned: Gujarat, Rajasthan, MP, Maharashtra, and Karnataka. It is a 75 to 80% of our revenue.
Great. And sir, as far as our balance sheet is concerned, we have 150 crore of cash in our balance sheet. And like you said, the capex is not more than 15-20 crore, right? The cost of capex.
Brownfield will be below 10 crore rupees. What we are going to plan for the next 6 to 12 months. That
And
will
the greenfield,
greenfield around 45 crores.
45
But that
crores.
will be
Okay.
coming for the not on an immediate basis. So that will be done into part to part for that. So within 2 years, that 45 crore will be investment.
And my last question, what kind of raw material do you stock up? For how many months do you stock up your raw material in general? Like when does material volatility sort of start impacting us?
So
And where do you source your raw material from?
yeah, sure. We do the contract with our existing vendors, and that is a 3 months contract. So if the
Okay,
raw material is procured for the 3 months actually, not in our inventory obviously, but
exactly, exactly. Hello.
yes, 3 months of the contract we do.
Yeah. So every 3 months you basically fix a rate every 3 months, right? Is what I'm understanding. Hello.
Yes, yes.
Yeah, and so let's say raw material, because I think in the last 2 years raw material prices have fallen a lot, right?
It's
One
not
of the
much
reason.
fallen. It is almost steady for that. Not much fallen. It is about the 1 or 2% max variations, not more than that.
So in the last 4 years, what kind of volatility have you seen in the raw material costs? Have they varied too much? Is it been a volatile sort of commodity, your raw material?
See, our main raw material is the VAM, vinyl acetate monomer, and the volatility was there into COVID period, and within this 21 to 23, and after 23, it is go back down to the routine rates, and it is not volatile. If we go about the history of past 10 to 15 years, so it is about to 65 to 75 rupees per kg around.
Okay, okay. Thank you so much for taking all my questions. And congratulations on a great set of numbers. Thank you so much.
Thank you.
We'll take the next question from Prashant Shah. Prashant. We take the next question from Resha Mehta. Resha, you can unmute and ask.
Yeah, I have just one question. So currently our adhesives, can cater to both PVC and acrylic surfaces. So do we have any plans to kind of, increase the usage of our product, maybe, by launching more products, just so that we can, increase the addressable market within the adhesive space?
So no, because currently what I explained that there is a huge market still lying into the white glue. So we want to cover that first, and that is a journey what we want to take this brand at that level. So we don't want to diversify any products, and that is the range is the epoxy adhesives, the rubber adhesives. So there are the very small volumes in the particular the end users level, so we don't want to stuck into that categories, and we are the white glue categories what we have selected, and it is a still a 7,500 crore of market, so we want to cover that first.
Well, can you just talk about like how big is the market for, these rubber adhesives or epoxy adhesives that you spoke about?
I don't have the exact figure about that, but at the usage wise, when we do the survey about the sites, it's a very small part of that the ch- the chota tube, that is the stone, or the any other material sticking about that. That is the epoxy adhesives range. And different is the tiles adhesives are there, then about the construction chemicals are there, the paints are there. These are the different products categories nearby this white glue category. But we want to continue our journey into the white glue only for that. So we don't want to stuck into the other products for right now, at least.
Would it be fair to say that, all these other category of non-white glue, products would be, the market size would be maybe less than 7,500 crores?
Yes, because the higher volume in as compared to that is into the white glue. If we compare about that, the paint industries are different, and the first thing is the users and end users are the different actually. If we talk about the tiles and adhesives, then it is the plumbers, not the carpenters. So we are targeting to the carpenters only right now.
Got it. All right. Thank you so much and all the best.
Thank
Thank,
you.
thank you. We take the next question from Jinesh Kothari.
Hello.
Hello. Yeah, am I audible? Hi, sir.
Yes, you are.
So, sir, I had two questions. So, basically, first one is on the guidance that you give for sales and promotion, that is 7 to 8% of the revenues for the full year. So, sir, if I look at the first quarter that has gone by, so your advertisement spend that you specifically shown in the P&L is around 18 odd percent of the revenues. So, sir, can this trajectory, so you said you have not fully capitalized those expenses in the P&L and it will continue in coming quarters. So, sir, just to know how this can be at 7-8% for the full year. So, if you can throw some light on that part.
So can you tell me what figure you are looking about the other?
I'm just looking at the 1382 lakhs that you are shown under S&P.
That is actually different. That is about these point redemptions and sales promotion offers redemptions. That is the expense for that. So for that, other expenses is the there what the advertisement and brand activities are lying into that. So you
Or,
need to think about that.
so then, sir, sales and commission would also constitute of the same thing that you are highlighting?
No, that is the commissions what we are passing to our stockist and channel partners. As a
All right. So the advertisement expense have not been shown
that is
separately.
into the other expenses, and that is the guidance by the auditor. So that is into the other expenses actually.
All right, sir. And so second question was on the thing that you just highlighted about the redemption, the provision that the adjustment you're doing in the revenue part. So, so just wanted some clarity on that. So, if I understand, once we are selling the goods to the dealer or dealer, so we will be booking some revenues on, we'll be booking the revenues and the proportionate the provision or the scheme that we are offering to them, we will be creating a liability for the same. So, sir, how the redemption then be impacting the revenue part? So, sir, that I couldn't get your point on that. So, if you can please explain those things.
So Vinay ji has already explained into the detail into this call, but I suggest if you go offline with the Vinay ji, he can guide us into the more detail. I suggest into that
Sure,
because
sure, sir. Sure, sir. That
already
will be helpful.
discussed into this call, so that's why, yeah.
Sure, sir. Sure, sir.
Yeah.
That would be helpful.
Please.
And sir, last thing on your capacity expansion plan. So, post this brownfield, you will be having around 35 liters per day of capacity. So, 3,500 tons per day of capacity. So, post that capacity
500
expansion.
ton for per month. We are
Per
going.
month, sorry, yeah, sorry, my mistake. So per month of capacity. So suppose that the your capacity expansion you're talking about. So how does you look at the utilization level ramping up post you commission that in FY26, and what is the incremental capacity that you are looking to put up? So some guidance on that part. So the utilization of the existing capacity would also help.
Sure. So see, right now it is a 2,000 ton current capacity, and we are considered as a 90% efficiency,
Right.
right? So we are increasing this to 3,500. Uh,
Right, sir.
so it will be the almost, if we consider the revenue wise, right now we are generating 300 crore of revenue with existing plant. Then after investing this 8 to 10 crore rupees into the brownfield, after this 3,500 capacity, we can go over our revenue to the 650 crores from here. So almost double from here.
Understood, sir. So that is at around 80-90% utilization levels that you are aiming on the full capacity.
Right.
Understood, sir. That was helpful. Thank you so much, sir.
Thank you.
Thank you. We'll take the next question from Vijay Shah. Vijay. We'll take the next question from Smith Gala. Smith, you can unmute and
Yeah,
ask.
thanks for the follow-up. As you, sir, mentioned that the quarter 1 demands were affected because of the onset of early monsoons. So generally, the setting onset early monsoon set onset will also mean an offset of monsoon early. So can we not target the volumes improving in Q2 itself?
So definitely we should target. See, our efforts are at the best level in the ground level, but in building construction material in real estate, there is always a up down. You can see over the last years, so many years, there is always up down. Sometimes the market is like is that if you see the result of the quarter 1 with this segment, all the companies has not much generated good revenue into the existing current quarter 1. So the reason is all over the demand, but that is not the reason, or that is not the excuses I want to give that, oh, so because of this it is open. We are into that, into the growth journey. We are trying our best, but our strategies is always look about the strong fundamentals growth only, not about the primary sales. We are focusing more into the secondary and tertiary sales. So it always takes a time to set up this network. If we see about our journey, that is 18 years of journey what we have invested into to set up this network, because it is a B2C model, right? So I suggest to look about the longer term journey, not quarter to quarter, and we are on to that path, and we'll definitely reach our destination within 2 3 years for that.
Okay, and second question, if I break up the other expenses, which were around 25 crore for the quarter, I assume that I break up them into 5 crore for marketing and 20 crore depending on the top line. So is the 5 crore run rate to continue for the coming quarters, and 20 crore will depend on the top line?
Can you see the number again? The other expenses is the it is the 7.45 crores of quarter 1.
I am considering all other expenses excluding employee. I am including them in the other expenses.
Okay.
So that total comes to 25 crores.
Okay.
And I'm considering if 5 crores will be the run rate for marketing and advertisement spend for the coming quarters as well. It was for this quarter, 5 crore was the run rate, and 20 crores will depend on the top line.
So it's depend upon the situations also, but you can consider it's a 8% of the all over marketing spend. That includes 4% of the trade marketing and 4% of the brand communications. So
Okay,
maybe in
this
a
quarter the run rate of the expenses shall continue going forward, right? There should not be an increase or a decrease for marketing spends.
It is not increase or decrease, but that is very little bit vary. Can see as an example, this is August month, is a very festive season month, so we are not able to do that type of trade marketing into this current situation, as Friday is 15 August or Janmashtami or like that. So that festival affects into the India market. People are not into the towns and like that. So after that we need to cover into the September months. So it is quarter to quarter we can consider about this will be the same almost what we have done. But for the trade marketing, I think most of we have investment done into the quarter 1. So it will not that much investment into the quarter 2 for trade marketing particularly.
Okay. And can you just again give that volume guidance for the year?
So we are targeting our
Welcome to the conference center. Please enter your passcode.
So
Yeah, please continue.
we are targeting ourselves as a 15 to 20% growth at least for the volume. every year. And as I mentioned that we are onto that journey. Yes, definitely we have not achieved that month. Quarter 1 is -3%, but still 9 months is there, and we are trying our best to cover that.
Thank you, sir. We'll take the next question from Harish Shah.
Yeah. Am I audible?
Yes.
Hello. Yeah. ઉત્કર્ષભાઈ, ગુડ આફ્ટરનૂન. ગુજરાતીમાં વાત કરી શકું?
बिल्कुल करी શકો છો.
Sir, I
हाँ
would
सर.
request, no, sir, we'll have translation issues and there are a lot of other people who won't
हिंदी
understand the
ओके,
language.
तो हम
हिंदी
लोग हिंदी में बात कर सकते हैं.
Yes.
या तो मेरा एक ये सिंपल क्वेश्चन है कि जो ब्रांड एम्बेसडर की प्लानिंग चल रही है वो एग्जीक्यूट हुई है या कब से एग्जीक्यूट होने वाली है या कोई कोई स्टेट्स में हो गई है? बिकॉज मैं मुंबई से हूँ, तो यहाँ पर तो अभी तक कोई भी जगह पर ब्रांडिंग उतना बूस्ट हुआ है ऐसा नहीं लग रहा है.
नहीं, वो हमने इन्वेस्टर प्रेजेंटेशन में ऑलरेडी मेंशन किया है कि हमने टीवीसी या डिजिटल प्लेटफॉर्म पे स्टार्ट कर दिया है. सो
ओके.
जी बिजनेस, सीएनबीसी के ऊपर हमारे एड्स चल रहे हैं, एंड लास्ट मंथ हमने आज तक एंड इंडिया टीवी पे भी किए थे. सो दैट
राइट राइट.
यूट्यूब है, डिजिटल, इंस्टा, फेसबुक, वो प्लेटफॉर्म स्टार्ट हो गए हैं. आउटडोर मार्केटिंग इज नाउ इनटू दैट जर्नी. सो Q2 Q3 में आपको दिखेंगे. शॉप बोर्ड्स है.
राइट
यस.
राइट. एंड माय छोटा सा सेकंड क्वेश्चन है कि मुंबई और सराउंडिंग स्टेट्स में जो रीडेवलपमेंट प्रोसेस हो रहा है उसके बाद में अभी अभी यहाँ पर सबका पोजेशन चालू हो गया सिंस लास्ट 1 ईयर. एंड आपका प्रोडक्ट मेनली यूज होता है इंटीरियर्स में. तो ये जो नए बायर्स या यू कैन से नए नए जो इंटीरियर के प्लानिंग चालू है उसमें आपका प्रोडक्ट का कंजम्पशन कितना हो रहा है सिंस लास्ट 2 क्वार्टर्स? उसके लिए कुछ आइडिया दे सकते हैं?
See, it is
Because
it is this product is always about the finishing part. जैसे रियल एस्टेट डेवलपमेंट होता है, नई नई बिल्डिंग्स बनती है, उसके बाद का जब फिनिशिंग पार्ट आता है तब
राइट
जो होता है, तो डेफिनेटली वहां पे हमको एक रेवेन्यू ग्रोथ की ग्रोथ होता है. तो बट वी आर इनटू द रिटेल, सो ऑब्वियसली नॉट डायरेक्टली डीलिंग विद द डेवलपर्स, बट
ओके
कारपेंटर्स टर्शरी के सेल के ऊपर ध्यान दे रहे हैं, एंड रिटेल में हमारा नेटवर्क है. तो जैसे ही ये डेवलपमेंट होता है रियल एस्टेट का जो जो भी सिटीज में, तो उसका डेफिनेटली कोई भी बिल्डिंग कंस्ट्रक्शन प्रोडक्ट को ये उसका ग्रोथ मिलता है.
राइट राइट राइट. ओके, थैंक यू सर.
थैंक यू.
Thank you. We'll take the next question from Prashant Shah.
Hello, am I audible?
Yes.
Yeah, so thanks for the opportunity. I have basically two questions. You have already informed that this quarter the revenue, the volume has degrown by 3%. So I guess that is primary sales. In terms of secondary sales, what has been the trend? What has been the degrowth?
No, that is the secondary sales only.
So
Tertiary
3%.
sale is the end user sell. Secondary is that to the retailers, and primary is the to the distributor.
Yeah, so I mean, what I understood was that same quarter, I mean, the previous year, first quarter we had 69 crores, and this quarter we had 75 crores. And the difference is basically because there has been a volume degrowth of 3%, price increase of some amount, and then there has been an excess redemption. So I thought this 75 crores, the 3% volume degrowth is primary sales, or is it secondary sales? Because secondary sales will not be captured in our P&L. Is my understanding correct?
No. So the invoice is generated to the retailers. It is obviously goes to the sales. So we don't need to confuse about this primary or secondary. That is the main difference, is because of that redemptions came aggressive into the Q1. So that is the difference, that 75 and 70 crore is 5 crore is a difference into that. So all over we have mentioned that we are less by 3% for that. So we want to be transparent to the investor. So we are guiding at that level. So you can understand more easily for that.
So basically 3% volume degrowth is in the secondary sales.
in a secondary sales, we can say.
Yeah. So by that logic, I mean, what would be the inventory levels at the secondary level? Because I mean, we would have added new distributors, so there would have been some inventory added there, and there would be increased primary sales. But otherwise, at the channel level, how are we seeing the inventory? Is there a stress, or are we comfortable with the inventory level at the dealer level and distributor level?
So see, most of our sale is by the stockist, consignee and sales agents. As an example, what I'm talking about, this 52 stockists, that is the inventory in our books, in company books. So that is the stock transfer from factory to that 52 branches, and then that 52 branches dispatch the stocks to the retailers. Then it is go to the revenue.
Okay.
So
So
yes, please.
please continue.
Yeah, so that goes to the revenue. So that is a different stocks into the different branches. It depends upon the volume of that particular branch. So if we go to the newer state, newer branches, then it is not much higher inventory into that, because of the volume is still low for that branch particular. So this is doesn't affect in our existing transactions for that.
Okay. So I mean, what I was understanding is that the inventory at the branch level is reported in our books. The inventory at the retailer level is reported, or that the inventory at the stockist level is reported in his books. Is that correct?
No, inventory into the stockist level reported to our books, and when stockist deliver the material to the retailers, then it goes to the sales.
Okay, okay, fair enough, understood. And at 31st March, our receivables was around 125, 128 crores. What would be the number at this quarter end?
I have not the exact number for that, but I think that is reduced, because the reason is that at that time, actually, see, in B2C segment, March month is always the month where we push the material to the retailers, because that is a loyalty program of the entire year and the volume growth that take. So we have delivered that 80 crores of top line into that quarter four. That was the highest till our date. So that was the reason that we increased that daters into that particular 31st March. But right now it is reduced to, I think it is about the 105 to 110 crores.
Okay, and I have some questions regarding the punch reduction, but I'll reach out separately to Vinay ji. Thanks for the opportunity and wish you all the best for the coming quarters.
Thank you. Thank you.
Thank you. We'll take the last follow-up question from the Hex Invi.
I wanted to ask, dealer network, do we have any branded or non-branded lam and plywood companies? Like, do we have dealers that deal in lam and ply and also in our adhesives?
Can you repeat these questions? Actually, you are not correctly audible for that.
Do we have any dealers or stockists that are dealing in lam and plywood also?
So what all of the stockists are there who has the network? So I think almost all the stockists has the distributorship of any plywood or laminate company. So they are all into who are into this business. We hire them as a stockist, because we can utilize their network.
Okay, so instead of dealing with the stockist, have we tried to, directly contact the plywood companies, branded or even non-branded for that matter?
No, we have not directly go with the plywood or company or like that, because they have already their different networks into the different states, different cities. So we go with the city base and the state base only. So we are dealing with the distributor of the plywood and laminate dealers, distributors.
Okay, okay, thank you.
Thank you. That was the last question for the day. Utkarsh sir, do you have any closing comments?
Thank you very much, all the investors and analysts, to keeping trust with our brand. We will keep continue our best efforts at the ground level, and we'll try our best to take this strong and steady growth for the coming quarters. Thank you very much.
Thank you, sir. Thank you to the management for your valuable time, and thank you to all the participants for joining this call. You may all disconnect now.